What's going on, guys? Good morning. Welcome back to another Everyday Growth Advisors pre-market live stream. Rate hikes on the table today with FOMC and earnings, which are underway even this week. Based on Monday's live stream, we did mention that sideways action was anticipated, and that's exactly what we've gotten so far. Lots of sideways movement this week, all the way from Monday, and today is Wednesday. We're expecting nothing but choppiness heading into this trading session. We have not got a breakout out of this box. The market is still kind of digesting the move after making a run up from the previous position where we had a short squeeze happen. And today we have FOMC meeting that is priced in a 75 basis point rate hike. So there's a lot of things to be discussed on the table today. Just a quick little ping from TD Ameritrade Securities. Just want to show you guys, of course, the expectations for earnings today. 75 basis point rate hike, which is 0.75%. 100 basis points is 1%, just so you guys understand the lingo. And also, in doing so, the committee would like to bring the policy stance so it's estimates of neutral, and also to retain optionally by leaving the door open to an additional 75 basis point rate hike for September. So the target base rate hike is going to be between 2.25 to 2.5 today. That's the number that we're looking at when the news is released. If it is a hawkish Fed, then they're going to be expecting to raise rates by 100 basis points, which is 1%. And if it is going to be a dovish Fed, then we would be delivering a 75 basis point, but they will be playing up the slowing in growth momentum and uncertainty about the economy, as well as GDP, as well as the job market. So labor market and labor participation will be mentioned. So here's the three outcomes. first outcome, which is hawkish. Powell reiterates that inflation is priority one, and the Fed has to bring down inflation expectations at any cost. That is super hawkish statement. The expected statement is Powell suggests that the Fed is preparing to continue front-loading the rate hikes as growth remains strong, but opening the door to another 75 basis point move in September. And then a dovish Fed would sound like Powell hints that a slowing in the pace of rate hikes is likely as the Fed becomes more cautious now that the neutral rate has been reached, and the chair flags slowing growth momentum as a material risk to the outlook. So that's the expectation here, and that's what we are pretty much seeing on the table across the board. Of course, this was posted on our Discord. I also posted a whole bunch of other reports that are very exclusive to our community this morning. I specifically like this report by Piper Sandler on what a value manager is to do when facing slowing EPS growth, and also the possible portfolios to be cycling into now with all of the beta regressions and also the returns on their assets, as well as their 3-month relative performance to the S&P 500, along with their price, market caps, etc. A huge list over here that I have to kind of sift through to see what's the right move here in terms of value-driven stocks. And it looks like majority of them are mid-caps, small caps, and that's what we're primarily looking at. So the story still remains the same in terms of macro. This week is still maintained as a choppy week. I am risk off. I have been risk off since yesterday's trading session. Barely traded anything. The only thing that I'm short currently is semiconductors, which has rallied quite a fair bit pre-market here. And we'll see if it continues to run up. If it does, then I'll close out my short position, turn around, go long. But I don't think that I will be doing that. Since I have a lot of time on those contracts, I'll be okay. But if needed be, I'll hedge my short position, go long with shares, or either take a call position that's slightly in the money to play the run up, and then close out the short position in the other direction. The bond market is also seeing some peak interest here, with yields coming down a little bit and the bond prices also kind of moving upward, which they behave in tandem. So technical and macro perspective, very different stories here. Of course, you have the QQQ yesterday, which sold off pretty aggressively ahead of earnings. A lot of market makers were, they were playing into the weakness of the market and trying to get positions for themselves at a cheaper price for earnings. Bets, which are going to be mainly today and tomorrow on the big tech. You have Apple and you have, a bunch of other big tech reporting earnings, I think pretty much today and tomorrow. So a lot of price action manipulation is expected in this next trading session. So that's the reason why I'm risk off. I don't like to play market where there is choppiness and there's manipulation. I rather play the breakouts when they do happen. So let's jump into the technicals. Oh, and also the VIX bounced right as we were expecting as the other day, right on the trend line, and we're starting to see it move up. But we'll see if we can continue to move up. It needs to reject $26 first. So the VIX at a 26 rejection, we'll see the move down. But if we continue to break above 26, then 29 and 31.50 is opened up, as well as 35. This upside will be then pretty valid at around $32, which would be the temporary top over here. And then we'll see this kind of squeeze continue. So that's another technical thing that we have to kind of cover here. So bond, VIX, and then let's look at SPX here. So on the SPX, the situation is still the same, right? It's still the same. 39.25 remains a very key level for the SPX to hold below or stay below on the close. If we get that daily close below this, then we open up the downside into 38.74, 38.75, this level here. And then if we do close above 39.90 and we hold above 39.90, then that opens up the 40.60. Anything between these two ranges is going to be a chop. A choppity chop. So I hope that kind of helps you out to, get a hold of where this market momentum is heading. Personally, I don't think that we'll see much movement until after the Fed. And typically after the Fed announces any news, it's going to be a fake out. And the first move is typically a fake, and then the real move typically happens a day after or a couple of days after. So keep your mind open for that. That's also a likely scenario. And if you look at the Qs here, you're also seeing pretty much, little pullbacks here, but still a sustained uptrend. Remember, the bullish pivot on the Qs is still 314. 314.50, I would say. And bearish pivot here would be the rejection of 300. Rejection of 300 here. Now, let's say we get a pop here and at the market open we reject. That's going to send us all the way back down to retest 280s. And yesterday we saw a lot of rolling down of put sweepers on the SPX. Majority of them rolling down their positions. We don't know if this was bullish or bearish pivot rolling. What we do know is that there is a lot of out the money strike put options being bought on SPY, IWM mainly. Now remember that this could also be a setup for a huge long position because they would typically buy the puts first and then buy equity behind it. So this would serve as a hedge for a bigger equity position. That's also a scenario. The only way that we would know how to confirm this is to watch the dark flow in the next 72 hours, the dark pool flow. So with the dark pool flow confirming if there indeed is SPX or SPY being bought, and then that would set us up for the rally, which you would see in translation of price action. So there's really not much you can do in terms of prediction here. This is more of guesswork, and it's more of understanding that there may be some institutional pressure betting on downside hedges if the Fed makes a rash decision. So that I think that the sweeper activity is more of a hedging position rather than a outright bearish bet. And that's just my 2 cents heading into this trading session and tomorrow's trading session, because FOMC can be a volatile event, and that rise in volatility along with the VIX bouncing here may send the market further down as a hedge for a short term, and that could lead to their puts printing. So that's kind of where I'm going with that notion of where the options flow is kind of pointing towards. Other things, Apple here, kind of, after this huge wave up, obviously has to pull back, but then pre-market's up about $1. Microsoft, after selling off pretty big yesterday, look at this huge sell-off, and then it, I think, beat earnings or had some good earnings, and it's up about $8 to $9 pre-market here. So we'll see if we can continue to find momentum on the upside here. Remember, if we see Apple and Microsoft hold strongly in today's trading session, then there's likely to see the market to be pulled up by both of these, and then you see the Qs start to pop back up. So we'll really be looking at these two mega caps, which are a combine of $4 trillion. As you can see, Microsoft is a market cap of like what, 1.88 trillion, and then Apple has a market cap of like what, 2.45 trillion. That's a combined of like what, 4.2 trillion dollars, right? If that market cap holds, it's going to hold up most of the market, right? So compared to your other stocks like Amazon, which has a market cap of, I want to say, what is it, 1 trillion? Is it 1 trillion? Yeah, 1.1 trillion, right? So there's a bigger weight on the S&P 500 with Microsoft and Apple, and that's just some cadence that you should keep in mind. Higher market cap will have a higher effect on S&P 500 and NASDAQ because they're market cap index. They're capped out in terms of, or weighted in terms of market cap. And then we also have some random semis bouncing, but we'll see if we can hold. This was after a big sell-off. This buy up was kind of expected. 171 will be the reject level for NVIDIA, which is what I'll be watching. And then also I wanted to cover Tesla, so let's have a look at that real quick. Tesla came back down to its pretty much breakout zone from last week at 775, and then bounced pretty strongly. So it found some support yesterday at the close, and then pre-market it's also up just a little bit here. How many percent is it? 1.86% pre-market here on Tesla. Now if we can see continued bullish momentum here on Tesla, then the retest of 840 is very, very possible, and then the continued push up into these upper ranges. But if we see a breakdown here and then aim to close the gap at around 745, then that would see, possibly continued sideways action here. So with Tesla, we really still have to watch. We can't really trade with any directional bias or certainty here. I think somebody was asking in the comments about Tesla, and so that's my 2 cents about Tesla, because as of right now, it looks like it's breaking out, but this breakout, as long as it's not sustained, it will not see that retest of the 840. It needs to sustain and hold above this 780 level. And then if we see more buyers on the tape and we see more price action confirming that indeed demand is higher than supply here, then we can start to take upside pivots on Tesla. Other things that I'm watching here, DoorDash for a possible short trade, broken down from this pivot here, and it's starting to reject. It's starting to reject this level. So if we see a rejection of $70.62, then we should see the downside slide. And we spoke about CrowdStrike as well on Monday's live stream. I spoke about it breaking down here and then the retest and breakdown below 174, 173. Now these two are great scenarios to wait for the rejections today and tomorrow. Once you see that confirmation of the rejection, then the short trade becomes easy. And remember to wait for the 50% bounce. So looking at this wave from here to here, if you're looking at the 50% bounce, you're looking at 181 roughly, right? So I don't know if we actually come up to 50%, but 178 looks like a very, very solid level to take a short position at. Otherwise, 175, if it rejects, then that's going to see the downside slide. And if we're looking at the fibs the other way, and we're looking at the extensions for where targets are going to be below CrowdStrike, then we'd obviously go from top to bottom here for this fib wave. And then the downside extension, max extension will be 152 back all the way to June 13th lows. But would have to break this 168 first in order to get there. So 168 break, then you play the 162 level. 162 break, then you can get into the 152 level. So pretty simple defined tactics here to play this one, especially with the double top here. We already saw that coming, and I already told you guys about this on Monday's live stream. A lot of opportunities are shared here. If you just turn up consistently and you just listen, there's a lot to gain. And I'm not sure if you guys agree with that, because I share a lot of gems on the pre-market. And this is like, you don't need to be on our Discord to pick up this stuff. You can learn and you can ask questions. You can even ask me, hey T, how do you draw a fib? I will gladly teach you. It's just some things that we enjoy doing here. So I'm happy that I can share this information with you and keep you engaged. That's all. Enphase Energy, I've been talking about this for a while. It finally popped, obviously pre-market. We have been seeing increased price action and support here. This pin bar was a good signal to buy, but I didn't take this trade because it's been trading kind of sloppy. But I was planning to take it on a pullback of 225. So let's see if from 239 it can come and pull back to 225 and find some support here, or maybe even close the gap at 220. That would be beautiful. And then we can take the upside on Enphase Energy here, and that would be great if we can actually play this to the upside. Apart from that, Walmart got smacked pre-market for earnings. Meta also has been struggling here because of just lower sympathy plays on other stocks. Pfizer with the pennant squeeze still continuing on here, and McDonald's with the nice breakout yesterday. This one hit the 23.6 extension on the fib very perfectly, and we'll see if we can actually go into the higher levels here with McDonald's breaking out back into the all-time high. So that's another stock that I'm watching, obviously above 260. So I'll set an alert right here at 259.68. If it starts to cross back up there, then we can possibly play McDonald's again. But other than that, we'll still keep an eye on it and just go objectively back into it. The other tidbit that I left you guys on Monday, which I'm not sure if you guys listened, excuse me, was utilities, right? And I spoke about utilities breaking out in a market that is expecting volatility. Utilities is a safe haven sector, and you can see a huge move that came up out of utilities. This is where I told you guys about it on Monday's live stream, and since then it's run up almost, I want to say, $2, right? About $2. So as I mentioned, this live streams, they're gonna be very informational if you just turn up and you're consistent with it and you just listen. There's nothing else you need to do apart from listen and smash the like button. That's all I ask for, and I hope that it's helpful. Okay, I will take any ticker breakdowns that you guys have for me now, and also I hope you guys are having a good morning. What's going on? I don't hear anything from anyone. I know there's a couple of you here. What's cracking, guys? How's your morning going? Drop your ticker breakdowns in the comments and I'll do them right now. If you don't have any, I'm going to wait like a couple minutes, or if you don't have questions, I'll end the live stream and then we can get on our way with the next part of the day, which is going to be trading with the team live on Discord. Today is likely to be a risk-off day for me as well, but I'll be watching the markets, of course, just how I was yesterday, just that I didn't really trade anything. Good to see the live stream again. Thank you, Seb. Yeah, man. Good. It's nice to be back, and I super appreciate you. Being here. Did you I hope that you gained something from the from today's stream, and I hope that that was helpful for you. Been following you since OS. Oh yeah, so you're OG then. You're an OG. You know what's up. You know the vibes. Dash, CrowdStrike, Enphase. These are my top watches today, mostly. And then remember what I said about Roblox. I said something about Roblox too on Monday. I told you guys that this has been very topside heavy. A lot of supply been coming in this range over here, and I don't really like this price action. But we'll see. Once Roblox breaks through this, it's gonna be a nice rip into 50s. So I kind of want to keep this in the back burner. One of the aces in my pocket. If Amazon can also bounce out of this, it'd be a nice little setup for a possible trade. I think this is now adjusted here though. Really weird if you ask me. Any tickers? No? No tickers that you guys want me to break down? Nothing at all? No questions? I'll give it like a minute more. Well, if you don't have anything, Etsy. Okay, let's have a look. Etsy. Oh, I haven't looked at this for a while. Oh, nicey. This looks nice. Let me pull up the weekly first. Oh man, look at that chart. Whew. The stock was $300 at some point. That's 1/3 from its value now. Okay, so let's see. It hit its dual zone here. Let's get rid of. You know what? Let's get rid of. So I really like to redo my charts whenever I see them after a long time, and when I see the supply zones and demand zones are no longer valid. So let's have a look at this. It's coming out of a demand zone right here. You can see that. This was a dual zone. Let's get that there. So this is your new demand zone. And then you have another demand zone / dual zone right here. So this is gonna be a dual zone right here. You guys will be able to see it pretty clearly. Area in which both supply and resistance comes in. So that's there. I'm gonna draw it out a little bit further so that we have price action into the future here. Okay, so that's good. And then supply is way over here. Of course, we have some supply in here. This dual zone is also going to be counted as a supply zone right now. So you have some pivots in this area. Now you have some key pivots. One key pivot is going to be here. Another key pivot is going to be right here. I want to see. Right here. Okay, now we have some important levels. Now we can move down into the 4-hour chart. Okay, so let's look at where it's coming out of. Obviously, this was a box channel here. So we have some key pivots here as well. This was a key pivot here. And some fake outs here. This could, volume trading, not bad, pretty good trading. But then, okay, so in that case, this is also a key pivot right here. Okay, so Etsy has to hold 88.40. Now let's look at the fib waves. So this wave is not complete. This wave is not complete. This wave is complete, so we could use this wave. So let's use this wave right here. Okay, so now we have everything that we need. Okay, so pivot is way up here, 114, right? That's one pivot. It broke through 38.2 and 23.6, and then it has earnings on the way today. It has earnings today. Okay, so let's have a look. So first things first, don't play it into earnings. That's my first recommendation, right? So wait till after earnings. So now, key pivots. The key pivots here are going to be hold above $100, which is where the 38.2 extension is, or a break and a reject of 88.40. This is how you're going to do your planning. Anything between there is going to be a chop. So anything between this zone is likely to be a chop. Anything break above this level and then a bounce, that will be long. Okay? Anything break below this level and then a bounce or a rejection, that's going to be downside pivot. Okay? That's how I look at these things. That's how we're going to... Now, there's a secondary analysis, obviously, which is the volume, right? So that's just price action. Now we look at the volume, right? We're going to look at the volume profile of this thing. But we can't just look at this volume. We have to kind of go back far, so to look at all the volume. Okay, so the volume shelf was way down here. Obviously, we never went to there that far. Where's the secondary volume shelf? Here. These are all low volume areas, actually. In fact, there's a pretty big volume void between here and 110. So this is a very, very small amount of volume. Now, if we go further into this zone, and we look at just this area, based on where it's been trading since January, February of this year, let's just say this year price action only, then you can see that there's pretty much a space of vacuum all the way from here to here, right? Kind of whoop, and then whoop, right? You see this vacuum? This vacuum is going to cause price action instability. So it'll either pull it up or it'll come back down to retest here and keep hitting this point till it gets enough demand to pop back up. Okay, so the majority of volume traded has been in the 80s in the last couple of months. This is majority volume, and some volume at around 140. And so in the next couple of months, we'll have to see if more volume starts to build in these levels. And the only way it's going to get there is if it starts to push its price up. And that daily volume is going to start to make sense. So the pivots on Etsy are going to be $100 and 88.40. That's the main pivots here. Above 100, hold above 100. It needs to hold above 100, like close above 100 and hold it. Or it needs to break down and start rejecting 88. And there you have upside pivot, $100 all the way to 114. That's a $14 upside. You can go risk off around, I want to say, let's say 95. You can go risk off 95 to 100, so that's $5. And then you have a $13 upside. So that's more than a 1:2 risk to reward ratio. The downside pivot could be really easy. Risk off at around 93. Or yeah, risk off at 93. So you have about a, let's say, $3 to $4 risk. And then your reward is, let's say you play down to 78. So that's $10. So this is going to present a 1:3 risk to reward ratio. The downside pivot is a better structure in terms of the risk to reward ratio. But the upside is not that bad neither. Of course, this is subjective. Okay, I hope that was helpful. Do you guys enjoy the breakdowns like this, like fully from top to bottom? Because that's the amount of time it takes to break down these things, to be honest. It's not as simple as most people would think. Like, it's not just about drawing boxes and drawing, it's not really about, like, charting is not really about... it's not about boxes and lines. It's about understanding where demand and supply comes in, but also playing around it in terms of the risk to reward ratio structure. That's more important, I think, because risk and reward is subjective and everyone has a different perspective on it. I just feel like, sometimes people get lost in the muck because they think that charting is all about just lines and patterns when it truly isn't. Or at least that's the way that I do it. It's very different, right? Okay, well, I'm glad that it was helpful. Okay, next one, snow. Oh, let me save this chart real quick. Here we go. Okay, now let's do snow. Okay, so this one also, let's go back into the weekly and see what's going on. Okay, so let me remove all of this first of all. That was all the past. So this has, oof, man, this is crazy, man. Wow. Okay. From a first glance, it doesn't seem like it's done selling, but let's see. Okay, so let's look. We saw the weekly and it looks terrible. This is what the daily looks like. It is sitting on a pretty substantial volume shelf, but it lost that level already. It lost it. It broke it already. So it's interesting for sure. I mean, this is where demand can come in, but let's have a look. Okay, so from a supply-demand perspective, this looks like a bear flag still, right? If you think about it, still a bear flag. It's an awkward bear flag. That's kind of a channel first, less of a bear flag. But okay, let's just humor it both ways, right? So it's kind of trading between this range here, where majority of demand has been coming in for the past couple of months. Yeah, this area does not have much volume. I mean, there was a lot of volume that came in on this one day, and then earnings coming up 24th August, so a month away. This is the tail end of earnings. Let's see here. I personally wouldn't want to touch this right now. Reason being because the risk to reward ratio structure, it's 50-50. So it's 1:1. So let me explain to you how. So obviously there would be a bearish bias to this thing right now, right? The bearish bias, like, okay, there's a gap below it, and then there's all this price action and very low volume here, right? Trading below that. So, you know, the liquidity is likely to push the price action down so that market makers can fill up at 110 or 112, right? Which is down here. And, you know, it's a very likely scenario that happens. But is that a good trade? That's what you have to ask yourself, right? Look at, if you do your short trade planning right here, right? Check it out. Let's say you take your profits right here, right? And you enter right where you are, and you use your stop loss at above this point, right? Because that's where your pivot is. Because it can swing up and then reject anywhere here, right? It can swing and reject anywhere here. It's only above here where you know that, okay, this is where the trade is definitely not going in my favor. Anywhere here, it can still reject in this zone. Here, it can reject here, it can reject here, and then it can come back down, right? Because this is the pivot. This is the pivot point. So if you look at your risk to reward ratio in terms of the trade, okay, this is not perfect here, so let me move it perfectly, right? Even if you bring it down a little bit, right? Your risk to reward ratio is 0.87. That means for every $1 that you risk here, you're going to get back 0.87, okay? It's less than 1. And the reason for that is because it's sitting right smack in the center of the channel, exactly where the demand zone is. So, in my opinion, when I look at trades like this, even though a lot of people see downside, I see risk off, and I see let the trade play out, or let the price action play out. If you let this come down, and sure, it validates your thesis, I would rather catch it here, right, at the end, right here, where it actually has a very easy risk management level. So here, I can take very little risk and get away with it. Let's say Etsy was going all the way down here, right? Well, so now I'm going to go for a long trade instead, right? Here's the difference. Now, let's say I enter somewhere around here, right? Where this line is. Let's say 117.28, right? Now, look at how easy it is. Even if you take into account market maker manipulation for stop loss, and you pull your risk all the way down, look at your risk to reward ratio. It's almost 1:4. 1:4, right? So this is the kinds of things you got to look at. These are the differences, okay? And I truly hope that you guys you know, understand these things. It's super important. So yeah, for Snow, I don't think the downside trade is valid here. I think you wait for the bounce on either side. So the play is wait for it to bounce either here or break out here, and then you play the upside, or here you wait for the bounce and play the downside, or you wait for the rejection and you play the downside. Either way, there's a place to be on either end, but you got to be patient with this one. I hope that was helpful. Was that helpful for you, Mike? All right. I hope you guys had a good time here. There was some learning lessons on the stream. But I will see you guys back again on Friday. And we'll do another one of these live streams. So come back with your tickers. And if you need more breakdowns, then let me know. And yeah. I'll see you guys on Friday, guys. Take care. And good luck on FOMC. Please don't trade into FOMC. Please, like, honestly, today is a good day to be risk off. Take the day off from trading. Don't do nothing. Come back on Friday, and you know, the market's still going to be here. You're not going to miss anything. Trust me. All right. Peace. Love you all. Thank you for showing up. Consistency over everything. Take care, and I'll see you on Friday. Bye, guys.